Welcome back, everybody. This is the last video for Chapter 4. We're going to finish out some things on process costing related to assigning cost to units of product and doing some cost reconciliations. But I wanted to start with a few sort of review questions from the last couple chapters, in fact. So just have a few questions interlaced with some notes here. So give these a whirl. First up, suppose you work for a company that makes soup and prepackaged frozen dinners. Blank would be an example of a product cost for this company, while blank would be an example of a period cost. Give A through D a look there, pause this, think about it for a second, and then I'll have the solution right away. So the best answer there is C. Wages paid to factory supervisors would be an example of a product cost, and more specifically, supervisory costs would be manufacturing overhead, keep that in mind, for this company, while wages paid to the company's human resources employees would be an example of a period cost. Okay, HR, legal, information technology, administrative roles, those would all be period costs. Let's look at a couple of the others to kind of make sure we know how to rule those out. The first one up said advertising costs for the soup products. Advertising would not be a product cost, that'd be another period cost, right? Another cost of selling. And then the salary of the company's CFO, that would be a period cost. So that second one would have fit this blank for sure. B, we had depreciation on machinery used to mix soup. So that would be an example of a product cost. And more specifically, that would be manufacturing overhead again as well. But this second one, wages paid to factory maintenance workers, would not be a period cost. Any wages paid to people working, in and around the production process there has to be some kind of product cost. Maintenance workers, I would suggest, would be manufacturing overhead. It's more indirect labor. And then the last one here, wages paid to employees who do random quality inspections on soup dinner ingredients. So yeah, that'd be a product cost. That'd probably be overhead since they're doing random inspections. Right? And then the second one, utility costs for the factory, that would also be a product cost, not a period cost. Again, any cost in and around that production process, in and around the factory there, we can consider that some kind of product cost. And utilities are certainly manufacturing overhead when we get that far. Okay, next up, does the following entry likely belong in the records of a firm that uses a job order costing system or a process costing system? And then does the entry represent direct labor or indirect labor? Give that a thought. Pause it here, look at the answers, and then I'll come back with the solution. So our best bet there is A. Since we have multiple work in process accounts for two different processing departments, this looks like an entry that would show up in a process costing system. Remember, in our job order costing system, we really only have one work in process account. And then this entry does represent or would represent direct labor. Direct costs we're going to book directly, if you will, to work in process. If it was indirect labor, we'd see the manufacturing overhead account in there. All right, next up, suppose you're at your local, your favorite local restaurant having dinner, and you overhear the manager telling another employee that the cost object they're most interested in is the customer, which is also the most appropriate cost driver for costs like specific food items, beverages, condiments, and disposable utensils. These costs would be considered blanked costs with respect to the customer object. And then with regard to their behavior, these costs would likely be best described as what? Pause that, think about the potential answers down here, and then I'll be back with the solution right away. Yeah, our best bet there is C. So these costs, the specific food, beverage, condiments, utensils, those would likely be considered direct with respect to the customer object. I should be able to associate individual food items, what people order, in other words, with the specific customer. Same with all these condiments and utensils they're using. And then with regard to their behavior, those costs would likely be best described as variable. Right? The more customers I have, the more chicken sandwiches I need, the more ketchup I need, the more disposable utensils I need, and so on and so on. Okay, next up, Carrington Corp produces canned vegetable soup. The company uses the weighted average method in its process costing system, which has just one department. The company sold 300,000 units in January, and here's some data concerning inventory. So beginning inventory, there was nothing in work in process. Finished goods had 75,000 units. At the end of January 31st, we had work in process of 24,000 units that were 75% complete with respect to conversion costs. And we had finished goods, 60,000 units. What were the equivalent units for conversion costs for this month of January? And I would just add, didn't say it explicitly, but we're only using the weighted average method approach in this class, so just keep that in mind. Give this a pause, work through the problem, and then come back for the solution. So that would be B, 303,000 units. So we had 75,000 units in beginning inventory. Everything was done and ready to sell there. To that, we'd be adding the units completed, which we don't know, minus the units we sold, 300,000, to give us 60,000 ending finished goods units. That means we must have completed the difference, or 285,000 units. So our equivalent units of production becomes those units completed, 285,000, plus that ending work in process, 24,000 physical units, times the 75% completion rate with respect to conversion costs, for a total of 303,000 equivalent units of production. All right, let's finish out our process costing material here then. We're up to learning objective 4, which was to assign cost to units using this weighted average method we've been using. So a quick refresher on our earlier example that we'd worked through in the last video. We had an example company that had equivalent units of production for this month of June in their one department with respect to materials of 5,940 and with respect to conversion of 5,670. And we had cost per equivalent unit of $21 with respect to materials and $15 with respect to conversion. So if we want to assign cost to units, we're going to need to know the equivalent units in ending work in process and the units transferred out, which we've already calculated previously, and we need to know that cost per equivalent unit. So let's start with assigning cost to this ending work in process inventory. In this scenario, we had 540 equivalent units with respect to materials and 270 equivalent units with respect to conversion sitting in that ending work in process inventory. Our cost per equivalent unit, as we just refreshed ourselves on, $21 with respect to materials, $15 with respect to conversion. So all I do to quote unquote assign cost to these ending work in process inventory units is multiply those out. So with respect to materials, that's the 540 equivalent units times the $21 per equivalent unit for a total of 11,340. With respect to conversion, that's the 270 equivalent units times the $15 per equivalent unit for a total of $4,050. Now, if I add those together, that means the total cost of ending work in process inventory for this assembly department is $15,390. If I were to look at the balance sheet for that particular processing department at the end of the period, that's the balance I'd see in that work in process inventory account under assets, $15,390. Now, to assign cost to units completed and transferred, I just need to take the number of units completed and transferred. Remember, those are essentially equivalent units as well, since they're 100% complete with respect to everything. And again, multiply that by my cost per equivalent unit. So for materials, 5,400 units completed times the $21 per equivalent unit for a total of 113,400. Over here, with respect to conversion, 5,400 units transferred times the $15 cost per equivalent unit for a total of $81,000. If I add those two dollar amounts up, the total cost of units transferred would be $194,400. And I'd see an entry if I looked in the journal for this particular department, passing those off to the next department. Right? So I'd see a decrease in this work in process inventory of $194,400, and then an increase to either a work in process account for another department or to finished goods if this department was the last stop along the line. And our last objective is to prepare a cost reconciliation report using the same weighted average method. So the cost reconciliation report, its primary purpose is to say, what are all the dollars that we're moving around within this production process in the current period, and where'd they all go? So the top half of that reconciliation is always the costs to be accounted for. And what we're trying to answer here is what were all the costs or dollars that were part of this production process at any point during the period. For our purposes, they really come from two sources. The first is the cost of beginning work in process inventory, dollars that had already been added in a previous period that were still kicking around in that work in process at the start of this period. I've pulled that number forward from our previous example, $10,039. And to that, we can add the cost added to production during that same period. So we're talking about all the materials, labor, and overhead that have become part of this work in process throughout this entire period. And I've pulled that number forward as well, $199,751, leaving our total cost to be accounted for at $209,790. Now the bottom half of this, we're just going to answer, where did those costs go? Where did those dollars go, if we want to think of it that way? For our purposes, again, they'll be going to two places. They're either still sitting in work in process at the end of the period, associated with goods that aren't finished yet, aren't ready to sell. I went ahead and pulled that forward from our cost assignment example a minute ago, $15,390. To that, we're going to add the cost of units transferred out. Right? So stuff that was moved out of this department, either to finished goods or to the next department, depending on where we are in the production process. When I sum those two, I get $209,790, and there's my reconciling point. So again, just two sources in each case. Where are the dollars or the costs coming from, if you will? They're either already sitting in work in process when this period started, or they were added during the period. And then where did they go? They were either transferred out to another department or to finished goods, or they're still sitting and ending work in process associated with things that aren't finished and aren't ready to sell. And that's really all there is for the cost reconciliation report here. And that concludes the last video for our process costing material. Please do review any sections you feel you need some further practice on. Let me know if you have any questions, and we'll talk next time.